Right, welcome to our, well, the first of our personal tax revision sessions. They're going to be every Wednesday night, 7 o'clock until, I think, the 7th of July, whatever I said. Cool. Quite a few of you here. Just as a quick roundup, who here is studying with First Intuition? Y'all give me a hi. Cool, lots of Team FI here. Cool. Who here, once everyone's finished saying that, who here is not studying with First Intuition? Oh, welcome, welcome. I hope this is useful to you. Remember, these are free and open to everyone. Tell your mates, tell everyone. If you're at college, tell everyone at college, definitely. Hope you find it useful. Cool, right, I think that's most people here. I'll keep an eye on the waiting room as they come in. For those who don't know me, my name's Nick Craggs. I'm AT Distance Learning Director at First Intuition. I'm also AT Tutor of the Year. I don't know how long I can keep saying that, so I'm going to keep saying that. And I love tax, and why wouldn't you love tax? Something wrong if you don't love tax. So tonight, obviously, it's all about personal tax. I am also, I think it's going to fall to me, do business tax revision sessions as well, around about end of July, August time, because I don't think I'm going to go on holiday anytime soon. Hence, I've made my mission to always wear my holiday clothes now, because I don't think I'll get any more use out of them at all. Yeah, it's a quality shirt. Oh, the other day, some cheeky little tutor told me it looks like my pajamas. Ringing that up in his appraisal, anyway. Anyway, so the plan is, over the next few weeks, we're going to pick, when we say we, I'm going to pick a subject that we're going to go through that I think students do struggle with. Now, for anyone else, I don't send out anything in advance because, if I'm being honest, I was writing these questions half an hour ago. But I will send them all out after the event, and I'll send it to anyone who can't make it, get the recording. So these questions are not in our course notes. So if you're a First Intuition student, you will still find them useful because you won't have seen them. And if you're not a First Intuition student, you can look at yourself, but hopefully you'll still find them useful as well. And they're written in the same style as our material at First Intuition, i.e. we don't just give you an answer, because giving you an answer is pointless, because if you don't know, if all it does is tell you got it wrong, it doesn't tell you why you got it wrong. Cool. So has anyone got any questions or queries before we get started and spend the next however long? They didn't put an end on the meeting invite as to how long I'm going to be, but I start getting paid at 8 and my wife comes knocking at 8 o'clock, so we'll be done by 8. Cool. Right, so if no one's got any questions or queries, let's get cracking. Right, move that over there, move that over there. Share screen. I don't want to share, I want to share that. Cool. So these are going to start, so we start off relatively straightforward, and then I'm not going to lie, they get incrementally harder. Cool. Can you see my screen? It should say Sam died on June the 18th. That's my birthday. I wrote this. You'll see lots of references in the tax notes to people dying on June the 18th. So that's my birthday, and it is my birthday on Friday. It's a big one as well, but I won't tell you which one it is. Cool. So these are, well, in fact, before we get started, there's a few things I want to mention about inheritance tax. Firstly, don't panic. It looks really, really scary from the outside. And when I did AAT, it wasn't part of AAT, so I never stood it. And then I went on to do chartered. 21, not far off, Tony, not far off. When I did chartered, I was like, oh my God, inheritance tax is so scary. And actually, when you get into it, it's not that bad. And people do, when you look at the examiner's report, people do well on it. It's only the last task with the calculation one, because no one likes the calculation one, it's only worth 6 marks. The other thing I want to mention, because we've got a bit crowd participation tonight, certain things we need to remember. Everyone gets a £3,000 annual exempt amount each year, but it can only be used against, well, I'll let someone in, only be used against lifetime transfers. So once you're dead and you've got a death estate, you cannot use the £3,000 annual exemption. And unlike other allowances like the personal allowance for income tax or the annual exempt amount for capital gains tax, you can actually have the previous year's annual exempt allowance to be used this year, but you have to use this year's before you can use last year's. And whenever you deal with any transaction in personal tax, inheritance tax, deal with it in a chronological fashion. So always start with the earliest and work forwards. So I've got some questions that I've written. There's nothing here that you shouldn't be, or you should be able to do them all if you're prepared for the exam. I think there's one at the end that's probably right on the limit in terms of not difficulty, but size of what we'd expect you to do in the exam. Remember, it's only worth 6 marks, but you could get any section on this, so you need to know how to do it all. And to be honest, I was in the flow, so I just wrote the whole thing. Cool. So let's have a look at, let's get cracking, really. Let's have a look at examples. Secret to any, well, not just personal tax, any question in AAT, read the question. It's well worth making sure you're very clear of what's going on, who's paying the tax, what the dates are before you plough ahead. So Sam died on June the 18th, 2016. Can't remember what I was doing on June 18, 2016. Probably not teaching personal tax. Anyway, he's got a massive estate valued at £905,000. I did not have an estate of £905,000 on June the 16th. Anyway, his wife died previous to him in 2014, and on her death, she'd used 65% of her nil rate band. So you can see what we're doing here. She's got some portion of her nil rate band that she hasn't used. He also made a gross chargeable transfer in 2013 of £280,000. Now, because it was gross chargeable transfer, it must have gone into a trust. So he's put some money into a trust, and with whatever exemptions he had, the chargeable value for that is £280,000. Don't worry about the £280,000 or what it was or whatever, and don't adjust it with any AEs. Just take it as it was £280,000. That's all we need to know. Cool. Then read the question. For those of you who were with my personal tax live class, there was a question, I can't remember what it was, but there was a question on calculate the death tax on a gift. And there was also an estate or vice versa. And the question just asked for the death tax on the gift, not the estate, but the estate was there. No, it's the other way around. There was calculate the death tax on the estate, and there was a gift. The gift would actually be subject to death tax, but that was not what you'd been asked. Be very clear what you've been asked for, because it's only worth 6 marks. There isn't. They're not going to ask for loads and loads of stuff. So you need to be very clear as what we've been asked to do. So we've been asked to calculate the inheritance tax payable on Sam's estate. So it's inheritance tax on his own estate. So it's going to be death tax. Does anyone want to tell me what percentage death tax is at? Cool. Yes, it is an eye-watering 40%. So let's get cracking. So Sam's got an estate of, got a pen to work, an estate of £905,000. And from this, we can start to take off various nil rate bands. So be very careful here. His wife had used 65% of her nil rate band. So any amount that was unused, she can transfer to him because they are married or civil partners. And I won't go into the reasons behind it. That's more of a tuition thing, but take it as read that she can transfer any unused proportion of her nil rate band. Now, be very, very careful here. 2 things. One is because she used 65%, she must have not used 35%. Don't mix those percentages up. And then it doesn't give you it, and I don't even know what it was, but the nil rate band that we use when we transfer it is the nil rate band at the time of death. So not the time of the original person's death, but the time of the second person's death, which I think in 2016 was actually 325,000. Probably could have updated the thing, but it doesn't matter. It is £325,000 that we can transfer over from the wife, and it doesn't matter what the nil rate band was at the time the wife died. It's the time of the subsequent part of surviving partner's death. So that will be 35%. So 0.35 times 325,123 means an amount of 113 £25,750 we can take off the debt estate. So that's an amount that's going to be taxed at 0%. Remember, the nil rate band is still taxable for death tax. It's just taxed at a rate of 0%. Cool. So we've taken off the wife's nil rate band, but then we can also take off Sam's nil rate band. Date of death to see if there's any chargeable transfers made prior to that date, because they will use the basic rate band. So going back 7 years from the date of death, which was June 16, the gift of the growth chargeable transfer in 2013 does come into it. Now, that would also actually be subject to a little bit of death tax, but that's not what we've been asked. So don't worry about that. It will get some death tax, but we're not losing sleep over that. But it will reduce the nil rate band for Sam's estate. So we will take off. So we've got the nil rate band of £325,000, and we'll take off the 280 that's been used on the chargeable lifetime transfer, gives us an amount of, I can do that in my head, £45,000 that's remaining from Sam's nil rate band. So that gives us a figure of 905,123 minus 113,750 minus 45,123 gives a figure of £746,250, which is subject to death tax. Now that's subject to the rate of 40%, as you all said. Gives a figure of £298,500. Is everyone okay with that? Does everyone see what we did here in terms of the unused amount of his wife's basic rate band, not basic rate band, that's income tax, nil rate band? Cool. That's not too bad. Cool. Now, we did use his nil rate band, Elzbieta. It was here, but because he'd made a chargeable lifetime transfer 7 years prior to the date of death, that would use up that would use up a proportion of his nil rate band. So that would be subject to death tax, although it would be taxed at rate 0% because which is covered by the basic rate band. But that leaves £45,000 of his basic rate band, which hadn't been used. Cool. Right, let's move on. We're going to step it up a notch here. There's an awful lot going on here. So let's see what we've got. So June 2016, he transfers cash of £860,000, and it goes into a trust, and he agrees to pay the tax. So two things there. It's going to a trust, so there will be lifetime tax payable. He is paying the tax. What rate will he pay the tax at? Cool. Quite a few, most there. Yeah, so remember, inheritance tax is a tax on the transfer of wealth, i.e. how much does Chris's net worth fall by? So Chris's net worth would fall by not just the £860,000 that he's putting into a trust, but also it would fall by the tax that he's paying on the trust behalf. So his wealth has fallen by the two things. So we want to tax it at the higher rate of 20 over 80 or 25% for effectively what it is. He also gave his best friend, we all need friends like this, he gave his best friend a gift of £290,000. And we're going to talk about dates here because it's quite important. So one was March 2016, so the gift of £290,000. So that's in a different tax year to the gift in June 16. Very important because the AE will reset itself again. Then in 2013, Chris gave his son £10,000 as a wedding gift. Cool. So let's deal with things in chronological order. Although we are looking at the lifetime, the transfer into a trust and the lifetime tax on that, we've got to go back 7 years from the amount that, go back 7 years from the date of the transfer into the trust and see if there's any transfers that will reduce the nil rate band available. So the first one is the 2013. He's very generous. So 2013 gave it £10,000 as a gift. So a pen up. So the 2013 gift. So that was £10,000. However, it was a wedding gift. So how much can he give his son on their wedding day to be exempt from inheritance tax? That's right, £5,000. So you've got the marriage exemption of £5,000. Now this was in 2013. So it was September 2013. So that is the 13-14 tax year. We've got no other transactions in that year. So you can have the 13-14 AE of £3,000. And then we can then go back and use the previous years because there was nothing in the previous year because that's the earliest one. So we can have the 12-13 AE. So now we don't need the full 3,000. We only need the £2,000. So that is gone. So we don't need to worry about the 2013 gift because it's just been wiped out using the exemptions that are available at the time. So we don't need to worry about that. The next thing we need to look at is the gift of £290,000. Now that was again 7 years before the transfer into the trust. So if I find my pen, so that was, when was that? That was March 16. And that was £290,000. From that, we can take off any available annual exemption. So we always go with the current year. So March 16 is in the the very end of the 15-16 tax year. So we can take off the £3,000. Then we can look at, did we have anything in the previous tax year, which would be the 14-15? No, we didn't. So we can have the 14-15 AE, which is another £3,000. So the amount of this would be, take off the £6,000, gives us a figure of £284,000. So that is the value for that. And that's going to use up £284,000 of the nil rate band. So if the nil rate band is, do a little working here, working one, £325,000 is the nil rate band. We've already used from the March 16 transfer of £284,000, leaves an amount remaining of £41,000. So he's got £41,000 of his nil rate band remaining. And now we can start to look at the lifetime tax on the gift in June 2016. So we've got the 2016, well, actually, just gift, and that was £860,000, and that's the amount that's gone into the trust. However, we can have the annual exempt amount. Now, the June 2016 falls in the 16-17 financial year, so we've got that annual exempt amount. But the year prior to that is 15-16, which we've already used. So we can't have that again. So we can only take off one AE on this transfer because that's all we've got, really, is the answer. Leaves an amount of £857,000, which is going to be subject to inheritance tax. Now, the first £41,000 taken from working one below is going to be taxed at a rate of 0%, which obviously at 0% gives you no tax. So that means the amount that's going to be subject to actual paying death tax is 857 minus 41 gives a figure of £816,000. And remember, as you all said, because, and this is really important, he is paying the tax. And also, if you are not told in the question, but you probably will be, if you're not told, always assume that the donor pays the tax, and therefore you'll pay tax at a rate of 20 over 80, or as you said, 25%, is a figure of £204,000 for inheritance tax. What do we think to that? Is that not too bad? You know, it's very, you've got to be careful and methodical, work through in chronological order, remember the AEs, and be very careful with the dates. That there, I think, is probably right on the limit for what you'd expect to do in a inheritance tax question in the real exam. If you got that, I don't think you're really in a position to complain in terms of it's too hard or there's too much. I think that is what I consider fair. So the reason why we only used the £2,000 of the AE there is because we didn't need to. We could have had 3,000, but the gift was 10,000. We used £5,000 on the marriage allowance, another 3,000 on the annual exempt amount for that year, and then you would. So you only got £2,000 left. So there was £3,000 available, but we didn't need it. We only needed two. Cool. Yeah, anything that, you know, any lifetime gift, any transfer under lifetime can use the AE. Do not take the AE off the estate. The other way of doing it. So the other method is, someone's entered the room, is say the, how you check your method is, so the amount of money that he has put into a trust. Now, when we talk about the chargeable lifetime transfer, it is on the amount after taking off any nil rate bands. So we've got that is subject to inheritance tax, 816. And then because that is going, he's paying that, that is part of the value for the chargeable lifetime transfer. So if we were to add them together, because that is what's come out of his estate, if the trust would pay the tax, it would be on a high, so the amount that he is given is, you add them together, gives a figure of £1,020,000. So that's the amount of money that his estate has lost. Now, it's actually slightly more because he's got AEs and things like that, but for the purposes of what was subject to tax, it was £1,020,000. Now, if you'd put £1,020,000 into a trust and said to the trustees, there you go, that's great, you lot pay the tax, it would be taxed at a rate of 20% because the trust is paying the tax. This gives a figure, again, it comes back to £204,000. So obviously, the reason why I've used a higher figure here is the amount that's come out of his estate. So out of his estate, if he pays the tax, is £1,020,000 because he's put a small amount into the trust, but paid the tax. Whereas if he says, I'm not paying the tax, that's your problem. To get the same amount of tax, he has to put a lot more in for him to lose the same amount of money from his estate. If you've got time to do that, that is fantastic. Really. Now, remember with these things, the actual end result here, the 204, you know, if you don't get that spot on, don't worry. Remember, the own figure rule applies. So if you get a question wrong but you remember the AEs and you remember the right rate, you just do something wrong with the nil rate band, you're still going to get lots and lots of marks. In a tax question, especially income tax, which is worth quite a few marks, and the tax bomb, if that bit's slightly out or your tax figure's wrong, it doesn't mean you failed by any means whatsoever. Cool. Right, let's have a look at another. So again, this should be relatively exam standard, I think. If you get it, you should probably think this is quite a nice one, for being honest. So Paolo died on 20th of August 2020, and he made the following gifts. He put some money into a trust, but the trustees paid the tax, which is important, which we'll come to. And then he gave his son £400,000. Then we need to calculate the inheritance tax arising as a result of his death. Now, he died in August 2020. So that transfer on the 1st of July 2012 will not be subject to death tax because this is more than 7 years prior to the date of death. So there will be lifetime tax paid. It is what it is, but it won't be subject to additional death tax. So is everyone clear why I'm not going to calculate any death tax on the trust? Cool. So it's not subject to death tax, but it does have an implication for death tax because the gift on September 2016, that is within 7 years of the date of death. So it is a PET, a potentially exempt transaction. Now, unfortunately, Paolo did not live more than 7 years from the date of that gift. Therefore, that gift has been pulled into the realms of death tax. Now, we haven't been given any question about death estate or anything like that. So we're only going to calculate the death tax payable on that gift. So we're going to look at the gift of September 2016. So when we are looking at a PET that's now become chargeable, we need to look back 7 years from the date of the PET, not the date of death. So do we have any chargeable transactions in seven years prior to the date of the gift? The answer to that is yes. Yes, we do. So we can look into that. So we're going to tax the amount of £400,000. So that's what he was. That's what he gave to his son. Because he was alive when he made that gift, he would get the AE. So he'd get, it was made in September 16, so we get the 1617 AE, which was £3,000. And then we go back another year, there's nothing else. So we'd also get the 1516 AE, which was, you see, another £3,000. An amount subject to death tax of, I can do that in my head, £394,000. So this is the first transaction that's subject to death tax. We're allowed to take off the nil rate band. However, the nil rate band will be reduced by any chargeable transfer made within 7 years prior to the date of the gift, which we've got one because that's how the question was written. So we've got working one, we've got the nil rate band of £325,000. And from that, we're going to look at how much has been used by the amount that's going into trust. Now, because it went into trust and the trustees paid the lifetime tax, there's no other amount on top of that. Now, typically in a question, we would normally give you the chargeable transfer value of this, and it wouldn't be the actual amount. But here, we've actually given you the amount that went into the trust to try and catch you out. But the trustees paid the lifetime tax the trustee paid lifetime, so there was nothing else above that. So yeah, actually, a couple of questions there. The AE, it can be used on death tax, but it cannot be used against the death estate. So it's a bit like the personal allowance for income tax. If you're alive, you get it. So this person here, they were alive when they made the pet. So we can use this. Now, if it was anything that they owned on the moment of their death, we can't use the AE. It can be used, it can reduce death tax, but it cannot be used against the death estate. Now, Steffi's asked another good question I was alluding to. The 106, we're going to take it off because what we've given you here is the amount that's gone into the trust. Whereas, I think in this other question, if I can find it, was it right at the top? Yeah, here we gave you the gross chargeable transfer figure. So what that is, the gross chargeable transfer figure is the amount that we are going to use in future calculations, and that will be after the deduction of any allowances. So don't worry about what the gross chargeable transfer, what it actually consists of. It was like, how much was the gift? Was there any AEs? Was it on the gift of their wedding, and which point they get another $5 grand or 2.5 if it's a grandson or whatever. So if you get given the gross chargeable transfer figure, it is what it is. But here we've given you the amount that went into the trust, which is a different figure. So in this case, this is physically the amount that went into trust, and he would get the AEs. Does everyone see the difference between giving you the amount that's gone into the trust and you're going to have to take off any allowances, or giving you the gross chargeable transfer, which is the amount when all the allowances have everything been deducted for you and calculated? So the gross chargeable transfer here, this might include the tax. It could be all manner of things. You don't need to worry about this. So that's been calculated for you at 208. It could have been, if we're being simple, amount going into a trust of £286,000, and he wasn't paying the tax. But it's already calculated for you. But here we have not given you the chargeable transfer value. You need to calculate that. Now, because he didn't pay the tax, it's relatively straightforward. It's the 106 less the £3,000 AE. That would be 1213, and then the £3,000 AE of 1112. That would be giving an amount of £100,000. Now, if I'm being honest, to hazard a guess, I would think AAT will always give you, if there's a prior transaction, they will also just give you the gross chargeable transfer. So you just need to know that that is the amount that will use up the nil rate band for any future transaction. But in this question, we haven't given you the gross chargeable transfer. You need to calculate it. That is basically the 106 less any AEs. Yeah, I would hazard a guess that they're probably just going to give you the gross chargeable transfer. But we've just made it slightly more interesting in this one. So anyway, so we've used £100,000, leaving £225,000 of the nil rate band remaining, which we can then take off here. That's going to be taxed at obviously 0%. Gives us a figure of minus 225,123. Gives a figure of £169,000. And we are calculating, what we're calculating here? The death tax. So that's going to be at a rate of 40%. Gives a figure, digital pen has run out of digital ink, £67,600. The nil rate band is the nil rate band of £325,000 less the gross chargeable transfer of any transactions made prior to the date of death. Now, he made a transfer, it's subject to lifetime tax, so that will reduce his nil rate band because it's within 7 years of the date of the gift. So that's why with some transactions you might have to go back a whole nearly 14 years. So if something, so someone died, so someone made a gift 6.5 years ago and then died, you have to then go back 6.5 years because that's subject to death tax, and then 7 years from 6.5 years ago, so 13.5 years ago. Now, the reason why we don't take off the £5,000 for the gift to the son is that's just a gift. It wasn't on his wedding or anything like that. The £5,000 is just for if they're getting married. So you can stack the exemptions. So the annual exempt for £3,000 on top of the £5,000 for a wedding. But if there's no wedding, you can't get the £5,000 AE. Now, the other thing to bear in mind is, because we're not stopping there, is how long ago was this made? So we're going to, the fact is, it was made in 2016 and he died on August 2020. How many complete years are there between the date of the gift and the date of death? Complete years we want. That's right. So I get it now, Jolly. So I like to count with my fingers. You can never, you know, you might look stupid in the exam, but you're far better to get it right. So he died. So the gift was made on the 1st of September 2016. So 1 year after that will be the 31st of August 2017, 31st of August 2018, 31st of August 2019. We didn't get to the 31st of August 2020. He died. So it's between 3 and 4 years. And like Adam says, will we be given the reductions in the exam? Yes, you will. I don't even know them. I've got them written down here. But I do know that between 3 and 4 years is 20%. You will get them. Don't learn them. Life is too short. So we've got 3 complete years. We didn't quite get to the 31st of August 2020. So we've got 3 complete years. So we're going to get taper relief of 20%. Now remember, the 20% is a reduction in the tax. It is not the tax. So 67,600 times 0.2 gives a figure of £13,520. It is a reduction in the tax, which means the amount of tax payable is £67,600 or £54,080. Watch out for taper relief. It will not prompt you to do that. You just got to remember, if it's something that's subject to death tax and it's more than 3 years old, there's going to be taper relief in there, which will give you in the reference material. Cool. Right, the next one, I don't think is any more difficult. It's just there's more going on, shall we say. Right. Let's see what's going on. So I think here there was actually a comment about taking off the lifetime tax and the death tax. We're gonna come to that. But the answer to that question about this task is the death tax is on the gift, and the lifetime tax would have been paid on that, so that there's no death tax on the amount into trust. Not so the only one who was subject to death tax was the gift. So we don't do that, but that might be a bit of a giveaway of what we're about to do. If I find my notes, there we are. So what happened here? So Sarah put £1 million into the trust, which is all right if you can get it, really. So So she put £1 million into the trust, and she, what else did she do? It was her first and only lifetime gift. So she's not very generous, but when she is, she's generous in a big way. And she paid the necessary tax. Then she died on December 2020. Didn't quite get it to Christmas. So we need to calculate the inheritance tax payable as a result of Sarah's death. So what's going to be the issue here? I don't know if she's got a death estate or anything like that. We've not been asked to worry about that. We've only been asked to look at this gift. So because it is a gift into a trust, there will have been lifetime tax paid on it. It's also going to be subject to death tax, which is unfortunate for her. Well, she's dead, so I don't suppose she cares. So the first thing we need to do is calculate what is the value of this. Because remember, we are going to subject this to death tax, and death tax is a tax on the transfer of wealth. So she put £1 million into a trust. So her estate lost £1 million. But her estate, like Tony exactly said, her estate also fell by the amount of lifetime tax that she paid because she paid it. So we're going to subject the tax that she paid to death tax as well. I know, tax in tax, but that's what we're going to do. But what we need to do is calculate in an order. We're going to calculate the value of the lifetime tax because we're going to subject the amount that she gave to the trust to death tax and the amount of tax that she paid on the trust's behalf subject to death tax. Seems harsh, but that's the rules. Anyway, so Jan 2015, she put £1 million into there. If you get the right number of zeros. She put £1 million into the trust. Now, she was alive when she did that, so she can have the AE. So when did she do this? In January 15, so that would be the 14-15 tax year. She gets that. 1, 2, 3. And there was no other transaction, so we know that she wouldn't have used it in the previous year. So we get the 13-14 AE. That's another £3,000. So that means the amount that's chargeable for the transfer of, before I calculate the lifetime tax, is £994,000. Everyone with me to there? I've run out of coffee as well. So that's the amount that's going to subject to lifetime tax. Now, she will get the nil rate band. There's nothing prior to this. There's no charitable transfers in the 7 years prior to the 1st of January. Therefore, she will get the full nil rate band, which we take off. It's going to be taxed at %, and we all know what that's going to do. So that means that we have a figure of 994.3 minus 325.3 of £669,000, and that's going to be subject to lifetime tax at a rate of 20. I want to put in 20% because it's not. It's 20 over 80 times 0.25 gives a figure of £167,250. So that is the lifetime tax. Cool. So now it's going to be subject to death tax, unfortunately, for her. So the amount of the chargeable lifetime transfer is that £994,000. The estate lost that, plus the £167,250. Is a figure of we've got £1,161,250. That is the gross chargeable value, that should be a C, that we're going to use as the figure of that's how much money her estate lost. So that is the figure that's going to be subject to death tax. £161,250. So that's subject to death tax. So we're going to look, have we got any, so now we're taxing it at the rate of 40%. We're going to look, have we got any transactions prior to the date of this? It's going to use up the nil rate band. The answer is no. No, we haven't. So we can take off the 325,000 nil rate band. That gives us minus 325,123, a figure of £836,250. Which is subject to tax at 40% times 0.4. Gives a figure of £334,500. Now, so we've taxed that, but remember, it was it wasn't a pet, but either way, it was a transfer that is within 7 years of the date of death. So we're going to look at, do we get taper relief? How many years, complete years, are there between the 1st of January and the date of death, which you can see here is the 12th of December. Anyone else want to be brave and tell me how many years there are between the complete years between the 1st of January and December 2020? Yeah, I calculated this one twice. So we've got a few options here. So again, calculate on your fingers. So she gave it on the 1st of January 2015. So one complete year would be the 31st of December 2015, 31st of December 2016, 31st December 2017, 31st December 2018, 31st December 2019. We didn't quite get to the 31st December 2020. So it's 5 complete years, not 6. So between 5 and 6 years, which according to my notes is 60%. 60%. So 60% of 334,500 gives a figure of £700. Remember, taper relief comes off the tax. It is not the tax. So minus 334,500 means there's death tax of £133,800. So the 330,000 was used because it's on the same transaction. So what's happened is we've got a transaction, it's subject to lifetime tax, and then it's the same transaction. So it's not like we've used a nil rate band against one transaction and then used it against another. It is the same transaction. So remember, the nil rate band is per person. It's not different transactions. So it's on. This is the same transaction. It's just it's subject to death tax now. So nearly there. So we've now calculated the death tax, but remember we calculated lifetime tax of 167,250. Nice. 167,250. So she's actually paid more lifetime tax than there is death tax. So we can deduct the lifetime tax off any death taxes that are due. Now, the lifetime tax is greater, so there's no death tax to pay. But we cannot get a refund. It just reduces the death tax due down to 0. There's no refund on this. So there is no there's no refund of lifetime tax. It just gets any additional death tax down to 0 because it's quite some time ago. So taper relief has reduced it down. Cool. And that is it for inheritance tax. Tax computations is one I'm going to, I think we could do tax computations next because, you know, it's not just knowledge, but it's also exam technique of using that horrible 3-column grid for calculating income tax. So the final answer, actually, Jessica, is no tax. No, death tax, sorry, that should be. Pen to work. Because it's all been covered by the lifetime tax that's been paid. But I just stress, there is no refund of lifetime tax. It's not like capital gains tax. So it's not like if you've overpaid, pay as you earn, because you've paid too much tax. Here you just paid it, and it is what it is. So the nil rate band, we'd use the nil rate band for the calculation of lifetime tax, and we look back from any date from the prior to that. Was there any of that? Then when we do the calculation of death tax, we look back. Was there anything subject to of 7 years prior to the date of the gift when it's subject to death tax? And the answer is again, no, nothing. Yeah. Now remember, I do want to stress there's quite a bit going on here. The odds are you probably wouldn't have to work out that figure there. It'd probably give you that, really. But you should be able to do it all in one go. The odds are you probably will make an error somewhere and you won't come to the right answer. But we're not looking for perfection in personal tax. The pass mark is 70%. So if you get a figure wrong and you weren't quite right at the end, don't beat yourself up. Yes, gross chargeable value is the net chargeable value plus the tax only if the donor is paying the tax. If the trustees are paying the tax, it's only what goes into the trust after deduction of any AEs. Next revision session is, well, this time next week. They're going to be every Wednesday night at 7 o'clock. Same link as before. I'll send out the recording and the questions. And we're going to keep running these for next, I think it's 4 weeks. I can't remember if it's 4 weeks. I think it is 4 weeks. And then most of my first intuition distance learning live shoots, I'm moving on to business tax, and I'll be running business tax revision classes because the odds of me going to Greece on the 4th of August are slim to remote, shall we say. Next subject next week. I'll probably do income tax. It's not set in stone. It's some of the other tutors are like, let's plan out what we're doing for the next 12 months. And I'm like, I don't know what I'm doing in 12 days time, never 12 months. So I am going to cover all the taxes. I'm going to cover income tax. I'm going to do income tax next week. I'm going to do capital gains tax because that's another tricky one. I'll probably do a share pool, and then I'll probably look at the other things like chattels. People don't like chattels, and that's the one that people do struggle with. So if you look at the examiner's report, task 2, benefit in kind on a car, everyone does really well on that. Then you move on to task 3, benefit in kind on everything that's not a car. People really do struggle with that. Cool. Cool. Yeah, recordings for last year. Bear in mind, you've got the. I think I have sent out the recordings. Well, I haven't sent out the recordings last year. The recordings from last year are on our YouTube channel, done by my good mate Gladwin. Now, bear in mind, they're the wrong Finance Act, but you lot are incredibly lucky that this time the personal allowance didn't change, the basic rate band didn't change. So, although it says FA19, any tax computation is fine. Any inheritance tax question is fine because that's not changed. There was £300 added to the AE for capital gains tax. So just bear that in mind if you look at any old capital gains tax questions. The only one I wouldn't look at is benefit in kind on a car because that's completely changed. Well, I'm going to stop sharing my screen because I'm going to bring up my browser. And I don't know, you know what friends like to send you all kind of weird things. What I'm going to do is put the link to all the recordings of last year's tax classes as well up. I've not watched them all, to be honest. I don't know what Gladwin covered, but stay clear of benefit kind on a car because that's completely changed now. It's brought in hybrids and how far you can travel on electric and things like that. But things like capital gains tax, minor change. It's just the AE. Personal tax not changed whatsoever. So like I said, personal allowance and basic band is the same. Inheritance tax never changes. Share pools never change. Chattels and things like that never change. In terms of the Finance Act, that's a really good question. Pupil players. Copy. The Finance Act normally changes every December. And moving on to FA, it would be moving on to FA21. AAT have decided for the lifetime of AQ 2016, it's going to be on FA20. So next year, anyone on AQ 2016 will still be studying FA20. So all this stuff here. Also, Quals 22 will be launching on FA21. So I'll be teaching 2 finance acts at the same time, which is going to be great fun, I imagine. Cool. Anyway, so in the chat box there is the link to Gladwin's, Gladwin's amazing. Gladwin's personal tax revision classes from last year. Like I say, just watch out for the AE on capital gains and watch out for don't touch benefit kinds on car. But everything else was fine. Cool. Any last minute questions before I go? See if I can go last a little bit of sun. If not, hopefully I will see you all next Wednesday night. These tax rates are valid for the FA 2021 tax year. That's right, which is last year, but it's not you're learning old stuff because this is the year that everyone's working on when they do their capital gains tax. Not capital gains tax, sorry, self-assessment forms. So people now are doing their 2020-21 tax returns. So we're in the 21-22 tax year, but we're all working on last year's stuff. Cool. Right, I'll let you all go, and I will see you all. Well, I might see you before, but if not, I'll see you all on Wednesday night for more tax. Love it. Right, have a good evening, everyone. Stay safe, and I'll see you all later.